Hello everyone. Welcome you to the concept of consignment account. I am Dr. D. Anita, Assistant Professor in Commerce from PhD College of Arts and Science, Coimbatore. Let's we discuss about what is meant by consignment account. In modern era of business competition, where the manufacturers and wholesalers have to use all possible means to push their sales, consignment is one such method resorted by them to secure the sale of their goods in different and distinct places without opening branches there. Consignment accounting is a financial practice that arises when a business agrees to sell products on behalf of another entity is known as consignor. And it is nothing about consignment is about an agency agreement under which a manufacturer or the wholesaler send his goods at his own risk to his agent in different places for the purpose of sale. And in this agreement, where the consignor retains the ownership of the goods until they are sold to a third party by the consignee, who is a selling entity. Hence, consignment accounting is a type of business arrangement in which one person sends goods to the another person for sale on his behalf, and the person who sends goods is called the consignor, and the person who receives the goods is called the consignee. And where the consignee sells the goods on behalf of consignor on consideration of a certain percentage of sale. As we discussed earlier, the parties who are involved in consignment account, there are two parties. One is consignor and another one is consignee. Consignor means the person who is sending or forwarding goods for the purpose of sale is known as the consignor or the principal. And the person who is receiving the goods for sale is known as consignee or the agent. Next, we look into important terms in consignment account, where once we are taking up of consignment account, we have to prepare all these important terms between the consignor and the consignee. So first one, pro forma invoice. Generally, the pro forma invoice is prepared by the consignor for the purpose how much goods has been transferred and what is quantity and what is the price for the sale of goods. So all these informations will be forwarded by the consignor to the consignee. Second one is account sale, where this account sale is a statement which is created by a consignee containing how much goods has been sold and at what price, and how much goods has been not yet sold and how much goods are to be returned and what are the expenses made by the consignee. So all these things will be made by consignee for consignor. The next one is commission. Commission is the reward or the remuneration to the consignee for the sale of goods on behalf of the consignor. There are three types of commission. One is simple commission, overriding commission, delegated commission. So all these commissions will be prepared and mentioned as earlier in the consignment agreement. So first we look into what is meant by simple commission. So simple commission, it is a set of percentage fixed by the consignor for the consignee for the sale of goods. Second one is overriding commission. Overriding commission, it means where the consignor wants his goods should be sold by the consignee at higher price than the one which is prescribed by the consignor is known as overriding commission, where the additional commission will be given to the consignee for fixing higher rate of price than which is fixed by the consignor. For example, if one box of medicine is rupees 500 rupees, in the sense where the consignee has told that he can able to sell for 550 rupees. So higher the rate fixed by the consignor. So for this purpose, where the additional commission will be given to the consignee along with the simple commission. Next one is delegated commission. Sometimes the consignee undertakes the risk of bad debts arising from the credit sale of consignment goods. So where the consignee sell goods for credit purpose. For example, there are 10,000 worth of goods with consignee where the consignee sells 6,000 worth of goods in terms of cash and balance 4,000 worth of goods he is selling it for credit basis. So in future where the credit sales can become bad debts and where it is a risk which is owned by the consignee. So for this purpose where the consignee is asking for some additional commission, it is known as delegated commission. And here also where the consignee will get simple commission as well as delegated commission. Next one is expenses on consignment. The expenses are incurred by both the parties. The consignor and consignee have to incur some expenses for dispatching and sale of goods. There are two types of expenses. One is non-recurring expenses and another one is recurring expenses. First, we look into non-recurring expenses. These expenses are incurred either by the consignor himself or by the consignee on behalf of the consignor. For example, packing, transport, carriage, forwarding, landing charges, off-free duties, unloading charges, railway duties, etc. All those expenses which are incurred till the goods reach the godown of the consignee are known as non-recurring expenses. Another one is recurring expenses. The expenses which is incurred either by the consignor or by the consignee or by both the parties. For example, bank charges, warehouse charges, brokerage, commission, salary to the salesman, and advertisement, etc. The recurring expenses incur again and again. Next important term in consignment accounting is advance. An advance is received by the consignor normally insist the consignee to pay some part of advance when he delivers goods to him on the consignment basis. And next one is stock on consignment. At the end of given period, some goods might remain unsold with the consignee. In order to ascertain the correct profit or loss, the value of unsold stock should be accounted. The stock should be valued on the basis of generally accepted principle of valuation. Example, cost price or market price, whichever is lower. Next is loss on consignment. Goods sent on consignment may be lost, damaged, or destroyed either in transit of goods or after it reaches to the consignee's godown. There are two types of losses. One is normal loss and another one is abnormal loss. Normal loss when the goods are lost or damaged due to unavoidable causes like leakage, breakage, dusting, evaporation, etc. And second type is abnormal loss. Abnormal loss is otherwise called as accidental loss, which is incurred unexpectedly beyond the controller of the consignor. For example, flood, earthquake, fire, war, etc. I think you are all clear with the concept and important terms of consignment account. And on next video, we just look forward for journal entries and ledgers for the consignor as well as in the books of consignee. Thank you all.